Welcome to The Explainer. Today we're diving into something huge, the artificial intelligence boom. But this isn't just a boom, it's a massive, high-stakes gamble that, really, the entire global economy is making. Let's break it down.
All right, let's start with a number. And what a number it is, $975 billion. To put that in perspective, we're talking about nearly $1 trillion in annual sales for the global semiconductor industry expected just this year. That is just staggering.
So where is all this money coming from? Well, this incredible growth, we're talking a 26% jump in a single year, it's being fueled by one thing, an absolutely insatiable hunger for powerful AI chips.
But here's where it gets really interesting. According to a new report from analysts at Deloitte, all this record-breaking growth, it's actually hiding a huge, risky problem. They're calling it a high-stakes paradox. It's like the entire industry has put all of its chips, pun intended, on one single bet: AI.
Okay, so let's get into that. First up, Section 1, the AI gold rush. We're going to see how this one technology is completely reshaping a trillion-dollar industry. Let's follow the money.
Now, this gold rush, it sounds great, right? But it has a flip side. It's creating this hidden fragility, a serious structural problem that could threaten the whole industry. It's not just that it's growing, but how it's growing.
And this slide, wow, this just lays it all out. It's a tale of two chips. On one side, you have AI chips. They're set to pull in about half of all the industry's revenue. But get this, they account for less than 0.2% of all the chips actually sold. Tiny volume. On the other side, every other chip in the world. The ones in your car, your phone, your laptop, everything. They make up the other half of the revenue, but they represent over 99.8% of the volume. Do you see the imbalance? All the value is getting concentrated into this one super specialized, tiny slice of the market.
So, when you focus so intensely on one thing, it creates a whole cascade of risks. Think of it like a set of dominoes ready to fall. First, you've got the return on investment question. Are all these incredibly expensive AI projects actually going to make enough money to be worth it? Then there's power. AI is an energy hog, right? Our electrical grids might just not be ready for what's coming. And here's a weird one. Even innovation itself becomes a risk. A newer, better chip could come out tomorrow and make today's super expensive hardware totally obsolete. And finally, those crazy high prices, well, that's like blood in the water for competitors who could jump in and crash the whole market.
And this isn't some far-off theoretical problem. This all-in bet on AI is causing issues right now. Chip manufacturers are, of course, prioritizing these super profitable AI chips. That creates what is basically a zero-sum game for factory capacity. And what's the result for the rest of us? Well, shortages and higher prices for the regular chips. The ones that go in your car, your phone, your computer. Yeah, those.
Okay, so the problems are bigger than just what's happening on the factory floor. A lot bigger. A recent report from Stanford University is sounding the alarm. They're saying this short-term obsession with AI is creating a much deeper, more systemic threat. We're moving beyond market booms and busts here and into something that could affect the very engine of innovation itself. The thing that powers our entire technological future.
And their warning is pretty stark. They say the whole American innovation system has always stood on three legs: the government, private companies, and universities. But that third leg, academia, the one that does all the fundamental blue sky research that leads to the next big breakthrough, well, that leg is getting wobbly.
So while private companies are dumping billions into building AI products they can sell tomorrow, the long-term government investment in the basic science that makes all of it possible in the first place, that's fallen off. And look at this projection. It shows China is going all in on this fundamental R&D. If these trends keep up, they're on track to blow past the United States in basic research spending before the decade is even over.
And this bar chart really puts it in black and white. It drives the point right home. Look at the drop in U.S. federal R&D funding as a piece of the whole economy. Back in 1964, it was almost 2%. By 2016, it had fallen to just 0.66%. That is a huge shift in national priorities.
I think the Stanford report says it best. We're harvesting the research seeds that were planted decades ago, but we are not planting new ones for the future. Today's AI boom didn't just appear out of nowhere. It started 50 years ago in university labs, with research into neural networks. Private money can't replace that, because private companies are always going to focus on what makes a profit next quarter, not the crazy, high-risk moonshots that might change the world in 50 years. All right, so when the stakes get this high, it's no shock that the game itself starts to change. We're now in a brand new global chip race. And the rulebook, it's being rewritten pretty much on the fly.
Check this out. A really interesting new investment model has popped up. They're calling it circular financing. It works like this. A tech giant, say a cloud provider, pumps billions into a hot new AI startup. Then, what does the startup do with all that cash? They turn right around and buy a ton of computing power and services from, the very same tech giant that just invested in them. It's a closed loop. It creates these incredibly powerful ecosystems where the money and the resources just keep circling back and forth.
And believe me, this isn't just a business story anymore. Oh no. Geopolitics has officially entered the chat. Governments are now looking at advanced chips as a strategic asset, almost like a weapon. This has kicked off a global scramble for what they're calling tech sovereignty. So what does that look like? Well, we're seeing export controls designed to kneecap rivals, massive government spending to build up chip factories at home, and even some really weird deals, like the US government literally getting a revenue share on certain chip sales to China. Things are getting complicated.
So, with all of this going on, what does the future look like? Where is this great AI gamble actually headed? Let's look at some things to watch for.
So, as this whole high-stakes game plays out, what should you be watching for? Well, the Deloitte report gives us a few key signposts. First, keep your eyes peeled for any market challengers. Is anyone going to be able to take on the current kings of AI hardware? Second, watch the memory chip market. We're in a shortage now, but that could lead to overbuilding and then a massive price crash. It's a classic cycle. Also, look out for more of those complex compute for equity swaps. They could really mess with profits down the road. And maybe the biggest one of all, the real bottleneck, power. Can our electric grids actually expand fast enough to fuel this revolution? The answers to these questions are going to tell us everything.
So the AI boom is here, and it's absolutely reshaping our world. But the big question remains, who's ultimately going to hold the power? The outcome of this whole thing is completely up in the air. It's this incredible tug of war between explosive commercial growth on one side and these deep systemic risks on the other, all while a global race for tech dominance plays out in the background. Who wins and who loses? Well, we're about to find out.